Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Today I wanted to talk about the monetary report released yesterday by the Bank of Canada. The report, among other things, made 6 predictions for the real estate market here in Canada. It had a number of other things included in the report, among them the bank's willingness to continue to taper in their bond purchases and reducing quantitative easing, but that's a video for another time. Today I just wanted to talk about the 6 predictions made for the real estate market in Canada. Toronto home sales have started to cool, and actually right here in London, my hometown, prices have started to go down in the past few months as well, and we're starting to see this trend more and more nationwide. So whether or not this is going to become a massive slowdown, a real estate crash, or just a blip remains to be seen. A lot of people, myself included, have said that we'll probably see a slowdown over the summer, as a number of things like buyer fatigue and people just wanting to get out and enjoy the non-lockdown period have led to a slowdown in buyer demand. But for its part, the Bank of Canada has made 6 predictions for what's going to happen with our real estate market, and I wanted to take this opportunity to go over those 6 predictions and kind of see how they might play out over the next couple of months and years ahead. So we'll go over those 6 predictions, provide a bit of commentary and analysis on them, and then we'll conclude with some advice for the future. So with the pandemic coming to an end, the Bank of Canada's first 3 predictions are really about seeing a slowdown in the housing market. They see first that new construction will be able to start ramping back up now that everyone's able to go back to work. And with the new construction, we should see a lot more new homes pop up across the country, which should help fill some of that pent-up demand that has led to the rising prices over the last couple of months and years. Secondly, they also see a slowdown in people wanting large homes. The banks and a lot of people have argued that so much of this demand has been driven by people that were stuck at home and wanted to have a little bit more space. Maybe wanted a pool, maybe wanted an extra bedroom, a home office, etc., etc. If it's easy to forget, but at the beginning of the pandemic and maybe even the past year, we didn't really know how long this was going to go for. And I mean, to a certain extent, we still don't, although everything's looking pretty good as of right now, with vaccination rates up so high. But the bank seems to think that once everything goes back to at least semi-normal, if not completely normal, that a lot of people are going to want to unload those large homes that they did purchase as normal behavior starts to set back in. So with them unloading the larger homes that they had before and less of a demand for those larger homes, we could see much less activity of people trying to upgrade from their starter homes to larger homes. So when we see less activity and less demand, we should start to see lower prices. The third factor that the bank seems to think will help cool prices are more people willing to show their homes now that the pandemic is over, or coming to be over soon. So the bank argues that there was a large reluctance on the part of the population to show their homes, to list their homes, because they didn't want strangers walking through for fear of infection, etc. So their argument is, as that subsides and people get back down to normal times, they'll be more willing to list their homes, and therefore we'll have more listings, more supply, lower prices. Or at least we won't have the skyrocketing prices that we've had the last year or so. So with those 3 arguments in mind, more new construction, more people or less people wanting larger homes, and more people willing to show their homes, the Bank of Canada is assuming that we should have much higher amount of supply getting injected into the system, which should help to cool down prices at least a little bit. The bank also has 3 suggestions as to why the market won't cool so much. Why prices won't drop immensely. They'll still remain higher than pre-COVID periods, but we're not going to see a dramatic drop. So the first positive news is that we are set to see higher employment. So the argument is that during the pandemic, there was a lot of people that were put out on the sidelines. of the real estate market, as thousands and in some cases millions of people were out of work. The mortgage lenders, wouldn't lend it to you if you were receiving CRB or the CRB. So now that we have thousands of people going back to work full time, that's going to be thousands and thousands of more people that are now eligible to buy real estate. So that should help to prop up real estate prices in the future, or at least stop them from cooling down so much, as more and more people are able to enter the market, just as some of others people are exiting the market as they stop looking for houses. There's more and more who have been waiting to get in, who are now able to because they're back to work full time. Secondly, population growth. One of the side effects of COVID was that we really had to shut down our borders, and there was a very low amount of immigration. So when you get a small amount of immigration, there's less need for rental housing, and then those who are currently renting don't need to buy houses. So as we start to reopen our borders and we allow more and more immigration back into the country, that'll help create more and more demand as well. Finally, there's an elevated savings rates that people are going to need to put somewhere. Whether or not they put it into the economy or tourism, at least some of it is expected to go into down payments for houses. So there's a lot of savings that happened in the past year and a half, not just due to the extra benefits, but because there was nothing to do. Even people that were working, they couldn't eat out, not like they used to. They couldn't go on vacation, they couldn't travel, they couldn't gather, they couldn't throw parties, they couldn't really go out. So there's a lot of pent-up savings out there, and the Bank of Canada is really expecting at least some of that to go towards down payment on houses. So those three factors combined, be it a return to full employment, more immigration, and pent-up savings, the Bank of Canada expects all three of those to help to increase the demand for housing in Canada, which should counteract the previous three factors that are going to help to increase supply. That being the new constructions of homes, less people wanting larger homes, and more people willing to show their homes, which were supposed to lead to an increase in supply. So when you take all those three together, the Bank of Canada is assuming that although housing will remain above pre-COVID levels, we won't see the massive upsurge that we've seen in the past year and a half. So the prices might fall a little bit, but we're not going to see a crash, according to the Bank of Canada. So what's likely to happen? We can assume that the Bank of Canada has access to a lot more data than we do. They have the printing press. One would assume that they have access to big data and all of government's data as well. So they should have a fairly good idea what people's intentions are, different market statistics, etc. So we should definitely take their predictions seriously, as they have a much better idea of what's going on in the market as an aggregate whole than most of us do. With that said, it's also in their interest it's also in everybody's interest, but especially the Bank of Canada's interest, that housing does not crash. The Bank of Canada knows this all too well, that they have a habit, or at least the potential for having self-fulfilling prophecies. If they come out and say that they expect housing to go down by quite a bit, or if they expect housing to crash, well, then no one's going to buy houses because they're going to wait for the crash. Thereby, the crash will happen. It's self-fulfilling prophecy. So the bank's well aware of this. So while we can take their advice and their measures and their data, we take it seriously and look seriously at their considerations. Let's also remember that the Bank of Canada and the government has its own interest when they're looking forward to what's going to happen with housing. Real estate, like it or not, during COVID and after, is a large portion of our economy. And the Bank of Canada and the government really need to keep that going. And, there's a lot of interested parties as well. Homeowners, home buyers, everybody needs real estate to at least keep on going somewhat. As for what I think will happen, I think that we're going to see a lull in the summer. No matter what, I think people are really going to try to enjoy the nice weather and be able to go out with their friends and really enjoy a reprieve from the past year or so. After that, I think it's anyone's guess what happens? We don't know. We really don't know what's going to happen. We don't know what's going to happen with employment. We don't know how many jobs are still left, how many businesses are still left. And all of that is going to have a direct impact on the housing market and on real estate. I've said this to a few clients now. Anybody that tells you what is going to happen come September, October, is lying to you. We just do not know. We've never had this happen before. We've never said, well, what happens after a pandemic? What's the economy look like? Well, the last one was in 1918, and that was a little bit different than in the global sense than we are right now. So we don't really have anything to base this on. I do think that we'll keep steady. I don't see a crash because there's too many vested interested parties in keeping the status quo. But with that said, we also don't know. So we'll have more updates as they come out, though, because we can try to know the best we can. If you have any questions or comments, please do leave them below. And if you like this video, please do click like and subscribe, and we'll have more content and news as it comes out. Thank you.